Hello traders, Gary Wagner here. 9:30 in Honolulu, 2:30 in New York on Tuesday, the 24th day of December, 2013, and this is the daily report for gold and silver. It seems as though on the last trading day before Christmas, we are going to see a moderate rally in the precious metals markets, with metals trading higher across the board, with the exception of palladium, which is trading off about $1 on the day, but gold is trading well above 1200. Currently, it is trading up about $5 to $6, 404.45. It's had a low of 1195.60, and it's up near the highs, which are sitting at 1206.70. Silver trading nominally higher to basically unchanged, 1945, as you can see on the screen. The low is 1925, the high is 69, and a print of 45 puts it up roughly a nickel on the day. Even in light of the fact that we do have a nice little rally going on today, and we're back over 1200. The facts remain that over this last year, we have seen the most significant drop in gold, a 28% loss in value. And when you consider that over the last 12 years, year in, year out, gold has been performing fairly eloquently on some years. Now, the real question is, obviously, as we go into 2014, what lies ahead? Are we going to see lower pricing in gold? Are we forming a base, any kind of a double bottom in this market? With the light volume that we're going to have between now and the end of the year, and the fact that we're going to have many investors and traders kind of squaring their books, taking positions off of their books, I'm not really going to look for a lot of clues over the next week, week and a half. On a technical basis right now, what we do see is some strong evidence, at least for now, that we do have some support at 1181. We've also identified some resistance just roughly at 1211, 1210. You can see this area here, but very, very supportive in through here right up until we had the break to lower pricing, and we threatened that low. We didn't quite get there, though. And so what that tells me is that if we're going to develop a base, this is the place that we're going to want to look at that. It fits in with one of our particular Elliott wave models that puts us in wave 5, and within that wave 5, simply put, we are looking for some sort of a bounce up. And what I mean is this: if we look at the 720-minute chart, we don't have our Elliott wave count, but this, of course, is our A, B, and C, and it's really the composition of wave 4 right here. Of course, this long wave down was a tremendous wave down from 1800 all the way down to 1181, and this was our third wave right here, and these are all part and parcel of an intermediate 5. And so what we're currently looking at is this current wave being our fifth wave, or concluding wave, because it would be 5 of 5. So at some point when it does terminate, we will have some sort of a potential bottom. But within this, as best as I can deliver, the count that I've been looking at is wave 1 of 5, 2 of 5, 3 of 5. So I wouldn't be surprised to see 4 of 5, and then our final 5 of 5. In other words, even if we get some sort of a rally right in here, if it follows suit with our current Elliott wave model, I would look for a bounce up. And really, to calculate potential targets for that bounce up, again, we look at our Fibonacci retracement. I've just put in a fib retracement from this last decline, this last sell-off. Our high roughly at 1360, low roughly 1288. And so the areas that I would look at, in other words, if in fact what we're going to see is some sort of a fourth wave bounce, that would be comprised of an ABC again, and we could look for certain targets or areas. Of course, we've identified 1211 as resistance, but if the market does break, we could look for it to go anywhere between 1227, possibly as high as maybe 1253. And then the last point I would look at in terms of a target would be 1273, although I'm not that bullish in terms of where I believe the market could go at this point. So if gold's price is to unfold in the model that we just spoke about, we would be looking at something like this. We've had our long third wave down. This is wave 4. We're currently in 5 now. We're subdividing 5. My sense is we've seen 1, 2, 3. This being our third. I would look for a fourth to take us, as I said, anywhere between, say, 1253 and 1273. If we truly get a bounce here, that's still to be determined. And then a final fifth wave down. And I still believe that there's a distinct possibility that we will, in fact, break this low right in here and go to a new low that is below the 1181. We are looking at a Japanese average chart, weekly format, Standard & Poor's 500. And this is the market I believe we need to watch for any kind of indication, because as you can see, we are in again a real strong wave back to the upside. Even on the weeklies, we've got a pretty large size candle as we go into this Christmas rally, so to speak. These are our small corrections, as you can see in red. And my sense is that if we're going to see anything like we have seen, which is rallies which have small corrective periods and not very, very deep, not the 10 or 5% that people have said is possible. We've had these series of small corrections before returning to an upward movement. As long as this equity market continues to be on fire, we have a real potential to see the precious metals continue under pressure. And of course, that creates opportunities for us. Lastly, in terms of gold, we're looking at our 3-day chart. It's got pretty much our master Elliott wave count. I still believe, as I said, we are in 3 of 5 currently. And what I've done on this particular chart is I've created a very, very small but tight line that goes across from these recent bottoms at 1181 and this 1188. And I'm looking back historically to see if it really matches any series of tops or bottoms. If we have some sort of historical evidence or technical data that would be supportive of the fact that this could in fact be a bottom. And not to be the Grinch here, but I do not find any of that. In fact, we don't really have any significant real support till about 1154, and that is that long-standing 61% retracement when we do our fib retracement from 700 plus to 1900 plus. That's a real important area, and that's one of the primary reasons on a technical basis that I believe that we could take one final stab to make some new lows before washing everything out first part of next year, and then we go into a significant rally. It could be in the form of an ABC. We talked about another model yesterday, which is a big picture model in which we can actually look at this bear count in this last series of events as a very, very long A, B, and C, and that's off of this very, very long impulse wave up, more of a grand cycle than even our majors or our intermediates. These are our intermediates that we're looking at. We have a major above that, and then there's a grand cycle above that, of course. But that would be another way to look at it. We would have all kinds of indications and technical clues along the way that would let us know that we were on target with that model, or that model really doesn't pan out. It isn't all that plausible. As we go into this holiday season, it is my wish that all of our subscribers at the Gold Forecast have a Merry Christmas, if you celebrate that, a healthy and prosperous New Year filled with joy and abundance. On one final note, we have corrected the issue that we had with the loyalty program. I've gotten lots of emails because we do have a deadline of December 31st in which that loyalty program will be good till. Because of the issues that we had over this last week, if needed, I will extend it to the first week, but right now it's still set for the 31st, which gives everyone a full week to go ahead and sign up. But those issues have been fixed. And of course, I do desire your comments, critiques on the changes that we are making to the website, to the members portal, and if there's actual features that are not there that you believe would be a benefit to you, simply send us an email. This has been Gary Wagner, wishing you, as always, good trading. Have a great holiday. We'll talk to you intermittently through the next week or so, and come back full born on the first part of next year. Bye-bye.